Hello and welcome everyone. Thank you for taking the time to join me today. My name is Kristen Magenst. I'm your product education specialist here at TraceSmith. I do work alongside Marina Stroud, your TraceSmith product education lead within our education department. Within the chat box, I have included the webinar script, and registered attendees will receive the webinar recording along with the script the following business day. Additionally, a recorded version of the webinar will be available on the TraceSmith Finance site as well within the help menu. Upon the completion of the TraceSmith Bootcamp series, we will host the beginner and intermediate bootcamp series again. Based on relevant information and new site releases, we do update those webinars regularly. And after careful consideration, our education team has decided to alternate our beginner and intermediate boot camps. We look forward to working on some new and exciting educational material for all of you, where we can provide more short how-to videos and specialized training for each product and level. We will post the beginner and intermediate bootcamp webinar registration links within the help menu for the entire month. So you guys may notice that it's more than 2 boot camps you can sign up for. We'll actually put the entire month. All right, so let's go ahead and look at today's topics. All right, there we go. So in today's lesson, we are going to discuss the normal amount of risk we take in each of our positions. TraceSmith does advocate for equal risk parity when it comes to portfolio management. So what this means is taking the same amount of risk in each position. It does not mean investing the same amount of money into each of your positions. So in order to understand the Risk Rebalancer tool fully, it is important to understand its primary function and why it is so crucial. We will answer the question, what is the Risk Rebalancer? And we will also discover how it guides us to put the right amount of money into each position. So before we get started, let's just review our usual disclaimer. The information we present today and in upcoming tutorials is intended for educational purposes only. We are not financial advisors and cannot provide any individualized advice or recommendations. We are recording today's presentation, so if you do miss something, don't worry about it. You will be able to go back and rewatch it at your convenience. All right, let's go ahead and get started. So I do have just 2 slides, and then we'll go to the website. All right, so what is the Risk Rebalancer tool? So the Risk Rebalancer tool takes a portfolio of securities and rebalances available capital among the component stocks. This tool can also rebalance a portfolio of cryptocurrencies. Today, we're just going to focus on stocks. It does use our proprietary volatility metric, the volatility quotient, so the VQ, to allocate more money to your lower risk positions and less money into riskier positions. So this tool does consider the VQ of each of your positions and your available trading capital to adjust your position sizing based on equal risk parity. So one way of being profitable is not to lose too much money on any one investment. The solution is risk parity. Risk parity means taking an equal amount of risk in each position of your portfolio. It does not mean putting less money into your riskier investments or more money into your safer, boring investments. So let's go ahead and see how this Risk Rebalancer works. I have one more slide, and then we'll head to the website and actually use the tool, and you'll see exactly what I'm referring to. Okay, so how does the Risk Rebalancer work? So just like it says, the Risk Rebalancer is kind of like a fancy calculator that considers a total available capital, the individual VQs of each holding, and the latest close prices for each holding. In your script, I did put in more detailed explanation, so please feel free to check that out. So I'm going to go ahead and get rid of this PowerPoint, and we're actually going to head to the website and take a look at the tool. One moment. All right, that should be good, the whole website. All right, so I'm already logged in to my TraceSmith Finance account. Just as a reminder, you will log into your account via finance.tracesmith.com, no matter what product subscription you hold with us. And also, I do have access to the full suite of TraceSmith products with my Platinum subscription. So your site may look different from mine. So as we go through here, it might look a little different. Those of you that don't have access to the Risk Rebalancer tool, it may not be included in your subscription. So you're still more than welcome to follow along on my screen. And if it's something that you may want, you just want to contact customer service and they can get you started having the Risk Rebalancer. All right, so before we get to that Risk Rebalancer tool, let's just check out that help menu really quick for our newbies. So if you want to access additional educational resources like these bootcamp webinars or the short how-to video tutorials that we record, you want to find all of that in the help menu, which is here in green. So you just want to click on that. And then we have our own folder. So you can click on the TraceSmith Bootcamp and video tutorials. Here you can register for upcoming webinars. If you have some trouble with Zoom, feel free to check out the troubleshooting guide we created. And then all of our lessons up to today's date will be housed in these folders. So these are the beginner lessons, and then these are the intermediate lessons. Those of you that are new, I highly suggest you start off with the beginner bootcamp lessons, kind of, check those off on your list, and then jump into the intermediate. But if you feel free to go ahead and do the intermediate if you're up for that. So no problem with that. And then those of you that prefer shorter how-to videos, if you click on the how-to video tutorial guide, that's basically our library and kind of like our education center where you can find short how-to videos, which are typically 20 minutes or less on a particular topic or tool. And that is the library that Marina and I are building up. All right. And then our concierge program, we do want to let you know we have a complimentary concierge program. It is 30 minutes, and what it does is it assigns you to a knowledgeable agent in our customer service team on a particular date and time that you choose. So if you want to book that complimentary concierge, all you have to do is just expand this contact customer success team tab here and schedule a concierge appointment. So I'm not going to go through all those steps. If you get stuck, just watch this quick how-to video. It's about 10 minutes for the steps on booking that concierge, okay? The only thing that's confusing is when you go to book a concierge, a lot of our members tend to put their username and password for the TraceSmith site, and it doesn't work because this is a separate site, a scheduling site through a vendor that we use. And so you do have to register and create a username and password separately outside of TraceSmith to use the concierge site. Okay, so if it's your first time, just click register, set that up. If you're coming back for another appointment, which is totally fine, because you're more than welcome to as many appointments as you like, just you simply log in with that username and password that you created. All right, and really quick for our Platinum members, remember your Platinum folder's here now. It's not on the dashboard. So our Platinum members, if you open this, here's where you can register for that Platinum webinar. That is this Thursday, May 25th, with Mike Bernick, our senior analyst. So feel free to register for that for Thursday. Those of you that are not Platinum members and maybe want to sit in on a Platinum webinar, you can contact customer service and they can actually provide you with a guest pass. All right, so let's go ahead and get out of here. And we'll get started. For today's demonstration, we're going to rebalance a test investment portfolio with stocks of varying risks and health. So there's all kinds of stuff in there. I did add red zone stock so that you can see how the risk rebalancer handles these positions. So to get to the risk rebalancer tool, you are just going to select my portfolios. And then you're just going to simply select risk rebalancer here. All right. So the first step to the risk rebalancer tool is selecting the portfolio that you're wanting to rebalance. For today's lesson, I'm only going to rebalance one portfolio. You are able to rebalance multiple portfolios. That can get a little confusing. In your script, I'll add instructions how to do that, but to keep it simple so nobody gets confused, we're going to use one portfolio. And to be honest, I have never done multiple portfolios. I handle my mom's portfolio, my husband and I's are separate. And so I never put ours together. I always do them separately. But it's all in your preference. All right. And I do want to let you guys know these little eye bubbles right here with the circle around it, these are going to be definitions. So anytime you see that in our site, please feel free to hover over it to read that. And as you can see, we did like a little box here for a quick video tutorial, our how-to videos, okay? All right, so that's something new. So we are attaching like the quick how-to videos if you hover over those eyes. All right, so let's go ahead and select my portfolio. So all I'm going to do is open this. I'm going to select my test investment portfolio here. I do want to let you know if you only have one portfolio here and you choose it, don't be confused when it says all investments, thinking that it chose all of it, including your watch list. It just says all investments because basically if you only have one portfolio, that's all of your investments. But we did get that question a lot, like, is it selecting everything? But it's not. It does say all investments. If you have multiple portfolios and you select the one that you want, then you'll see the name of the portfolio here if you have more than one. All right, so I selected the test investment portfolio. So that is good to go. And we are just going to review some of these square boxes to the right. So before we rebalance, so this first box here, which is the total value. So what this is it's the total value is the sum of the currently available capital of long equity positions in this portfolio plus any cash and dividends that you wish to allocate to the rebalance positions. The total value is the amount of money that will be rebalanced across the equities in this portfolio. If you rebalance a synchronized portfolio, I do want to throw it out there, the total value is not going to reflect the portfolio value from your live brokerage account. So what I did is, in order for you guys to determine the total value, here, we do have a little calculation that we do for you. So we take the sum of all of your positions, latest close prices, times the shares plus your cash. So I did put that calculation in your script for you. All right. The next one is current securities. And remember, there's little eye bubbles that you can hover over and get the same definition that I put in your script, okay? So the current securities is the value of long equities, not including your cash, okay? So it's not including this. And if you do the calculation, you take this sum and deduct this. You take this sum and deduct your 50,000, you would come up with this, okay? So it does not include cash. And basically what the current securities is, it's the latest close times the shares. All right, and then the next one is our cash. And the cash is the total available cash to be invested. So by default, the tool includes all of your cash to be invested. You do not have to reinvest your cash. So if you want to exclude your cash, you're just going to basically click here to take the check out. And you can see that it took this total value to match this. So if I did not want to reinvest the 50,000, I would uncheck it. Now, when I say reinvest, what it's going to do is it's going to basically take your cash and try to reinvest it into stocks that are already in your portfolio, if that makes sense. So if you're not really wanting to buy more stocks to put in your portfolio and you kind of want to keep the stocks you have, but maybe add more shares to them, that's what it's going to do. All right. And then if you want to maybe edit the cash amount, you can do that. So if I put this check back in and say that I don't have cash in my portfolio and I'd like to pull money out of my holdings, out of my current securities, you can do that with this tool. So in order to do that, what you need to do is open this pencil here. So you're going to keep the green check here. So open this pencil. And so if you're wanting to pull cash from your current securities, you would take this out. So I'm pretending like I have no cash, and I want to withdraw it from my current holdings. I am going to want 10,000 for my current holdings. So for my current securities. So in order to do that, you just have to remember you have to put a negative sign. So if I put negative 10,000 here, you will see that this is going to change. So once you do that, you can press OK. And it's going to be deducted from the current securities, I believe. I'm sorry, the total value. So you can see where the total value, it basically took the current securities. I'm minusing 10,000 because I want to take it out of here. And it changed it by 10,000. So that's if you don't have any cash and you want to take from your current securities. And you can see it's approximately 84,000. So perhaps I don't want to be fully invested, but I want to add some of my cash. So I have the 50,000, but I don't want to really use the whole 50,000. Maybe I want to, save some cash for a rainy day. So let me go ahead and reset this to show you a different way. So if you hit reset here, it'll change it back to the 50,000. So say I don't want my full cash to be reinvested. I only want part of it. So say that I want maybe 12,500. If I edit this, so remember the pencil is to edit. You still want to keep your green check here. I don't want all of my cash to be reinvested. I'm going to type in the 12,500. Oh, I forgot the 5. Hold on. There you go. All right. So you're going to see that it's going to change this by 12,500 versus the 50. So all you have to do is press OK. So basically that other, the other 38,000 will be saved, still as cash in my portfolio. And I'm going to go ahead and press OK. Okay, so you can see that now it's approximately 106,000. All right, so you can put whatever sum you want here, deducted from the current cash you have if you don't want to be fully invested. So I'm going to open this. I'm going to hit reset. All right. And as you can see, that brings us back to our cash starting at 50,000, and then you can edit it. All right, so the next box is the dividends box here. So the dividend field allows you to include dividends that have accumulated as cash. So this could be a little confusing. So if you're reinvesting your dividends as additional shares, you don't really have this cash, especially in a synchronized portfolio. If your dividends are invested as cash, this should already be reflected within your cash field. We do obtain this information for you automatically if you're syncing from your brokerage. So there's no need to put a check in the include dividends to be invested box. So those of you that are syncing with us and not doing a manual portfolio, please do not put a check in here because the tool is already doing it for you. This feature pertains to members who are tracking their portfolios manually. Okay, so if you're doing a manual portfolio or you uploaded like a CSV file and you're tracking everything manually, we do not update your cash balance when your stocks have been issued dividends. So if you're tracking your investments manually, you should also ensure that your cash balance is accurate. Okay, so you're more than welcome to check that. For now, on this demonstration, I'm not going to. But again, you can hover over here and get that definition, or it's in your script. Some of these photos in your script, I'm getting like, you can't really see them for some reason. It's like blank, but hopefully when you guys get it tomorrow, you'll see it. So I'll go back through and see why the images aren't showing the examples. All right. So again, if you run a synchronized portfolio or a manual portfolio, you can, if you want, just skip the dividends feature and just make sure that it's unchecked. So I'm going to keep it unchecked. All right. So before we hit the rebalance button, I do want to show you one more thing on this page. It's the show advanced options link located to the right of the rebalance button. So right here. So if you click on this, what this does is if you put a check mark here, Okay. If you check that, this feature will reallocate funds from positions that are stopped out according to the health indicator and will basically result in more money be invested in your remaining stocks. So when I say stopped out, that's the red ones you have. So if you are basically wanting to sell your red zone stocks, you can select this feature and the money from those holdings will go to your remaining positions. I'm going to keep mine unchecked because I don't want to sell any of my red stocks just yet. I want to see what the risk rebalancer tool tells me. But if you're already planning to, clean up your portfolio and get out of those red zone stocks, especially if you're following the health indicator where, if you get that alert and the position goes in the red, you're going to go ahead and sell. Then that's when you maybe want to check this if you're cleaning that up. So for now, I'm going to keep that unchecked. Because you can also do this on an individual basis, in the risk rebalancer tool. And I'm going to show you how to do that once we get in here. All right, so I'm going to go ahead and get out of here. And again, there is a definition here. I'm going to go ahead and hit rebalance. So if you're following along, feel free to do that as well. All right, so there's going to be a lot of information on this page, but we're going to go over it. That's all it scrolls down. Okay. So we're going to take some time to review the rebalance overview tab. We're going to go to the rebalance results tab, and then we'll, at the end, check out the holdings tab. All right, so let's go ahead and start off with the risks, the rebalance overview, which is the first one. So the rebalance overview, we do the first box here. We do the portfolio volatility quotient, the PVQ, which is the total overall portfolio volatility quotient. So just as we can assess the overall VQ or risk of a security, we can also assess the overall portfolio volatility. So just like we can see, a stock, the VQ, like a certain percentage, we can actually do it for the entire portfolio. So that's the whole point of the risk rebalancer tool, is to basically do all of the stocks in the portfolio. All right, and in your script, I did put the volatility quotient breakdown. So as you know, TraceSmith defines the risk of any security by the VQ. It represents the security's normal risk and is based on historical prices. So let me just break that down for you really quick. So any stocks up to 15% with a VQ, we consider low risk. Any stock with a VQ of 15 to 30%, we're going to consider medium risk. Any stock between 30 and 50%, we consider high risk. And then any stocks in our database over 50%, we consider those stocks sky high risk, okay? Once I edit this video, I'll put that little breakdown here. So it's actually on the video, but it is in your script. All right. So understanding the risk of the entire portfolio is a little more difficult. There are several things to take into consideration when we look at the risk of the overall portfolio. So we're not simply averaging out the positions VQs to obtain an overall PVQ. The portfolio risk not only considers the VQ of the individual securities, but it's also considering the correlation between the securities that make up the portfolio. So a lot goes into it. We're not just taking, all of your stocks and combining them and seeing, what is less, what is more. So specifically, we do look at the individual VQs of the holdings, the price cross correlations between the holdings to determine this overall PVQ. Also, I do want to let you know, you will typically have a higher PVQ if the holdings are correlated, or if they move up and down together in the market, okay? And when you are diversified, you can potentially have high risk securities and still have a lower overall PVQ. So everyone's results are going to be a little different. In your script, I did put like a little link to a definition for the diversification quotient. So check that out, and a quick how-to video that Marina did to explain how that works, because it can be a little confusing, but I think with those links, it should click a little bit. More? All right, so let's look at these results. So this portfolio's current PVQ is approximately 18%, and I know that by looking at this. So my current portfolio before I came to this risk rebalancer tool was approximately 18%, and which isn't too bad. But what this tool can do is it can take my portfolio down to approximately 15%. So approximately, 2.54%. We do say a PVQ of 15% or less is considered low risk. So I'm basically there. So if I change my portfolio with the results when we get to the next tab, my overall portfolio would basically be considered low risk. So knowing the normal volatility of your portfolio is so important. Please keep in mind that the PVQ is more of an expected portfolio drawdown because it does not accurately tell you what your maximum drawdown would be if all of your positions were to stop out at once. So the PVQ should be a reasonable approximation. All right, now let's take a look at the second box here, which is the volatility risk per position. And again, there's definitions here. This field, you can actually change it to either be expressed as this percentage or as the dollar amount. So if you'd rather see the dollar amount, if you click here, you can choose the dollar amount. I'll keep mine on the percentage. So what this is letting me know is that if I were to take these results, every single position in my portfolio, the new portfolio, with the changes I do, every single stock in this portfolio will have the same risk per position. And I'll show you that on the second tab. So it's going to be 1.8% straight down the line for every single stock in this portfolio. So it's basically even weighted. I'm not heavily weighted in one stock versus the other. It's basically all the same straight down. And you will notice that it tells you here the volatility risk per position of this portfolio is 1.8% of the portfolio. Again, if you put that in dollar terms, it's approximately 1,600 out of the total portfolio capital, and it shows you what the total is. Okay. And we do say, again, 1 to 2% per position is considered to be conservative. So I'm basically very conservative if I were to make these changes. And I'll show you on the second tab how out of, in the one tab, it'll show all different percentages, like all of unevenly weighted. And then the new results are perfect, like straight down the line, even weighted. All right. And then before we get there, let's take a look at the risk allocation. So what this is right here. This is just this bar graph, these bar graphs here. They just represent the percentage of the portfolio invested in securities with different VQ measurements. You can compare the current risk allocation versus the rebalance allocation. So this is the current portfolio, how it is. And if you hover over that, you can see the blue is low risk, medium risk is green, orange is high risk, and pink is sky high risk, okay? And then there's definitions here as well. All right, now let's get to the fun stuff. Let's check out the results by going through the Rebalance Results tab so you can see what this tool's doing. So all I'm going to do is click on the Rebalance Results here. And let me scroll this down for you guys. All right, I know there's a lot of information on this page, so we'll go through it. All right, so the first column is, we'll get to this later. The first column is the ticker column. As you can see, the Risk Rebalancer does list your tickers in alphabetical order. All right, so all of your positions in the portfolio that you chose should be here. The next one is the health. So it's going to show the current health status of each holding and how long it's been in that current state. So for example, Apple's been in the red zone for approximately 4 months or more. Amazon, surprisingly, is still in the red zone for a year or more. You would think they're doing good because I literally have Amazon come to my house almost every day. I'm kind of ashamed. I wonder what my neighbors think, but it's really my son getting stuff. He's too spoiled. But anyways, and then you can see this has been in the green zone for 10 months or more. All right. And then the next column is the VQ percentage column. And this is the normal risk for each position. So this is going to show what the risk is for each individual position over here. Okay. So these correspond to this. This has nothing to do with the overall portfolio volatility that we saw over here. All right. And then, of course, you have your entry date. We really don't pay attention to that in this risk rebalancer tool. And then the next tab is going to show your latest close. We do use the latest close prices to determine the adjusted share prices, okay? So please keep that in mind. And then the next field, this is what I want you to pay attention to. So this is the position size box. It is displayed in the dollar amount here, as you can see. If you hover over here, it says the amount of money invested in each position in the portfolio. So again, this is kind of showing on that first tab where you can change the percentage to a dollar amount. It's doing the same here to show the dollar amount. So it is going to show you here. We're going to get to this as well. If you want to see it displayed in a percentage, you're more than welcome to do that. So these two are basically the same. One's just showing a dollar amount, one just shows percentage. That's all that is. Any figures in the red indicate a decrease in position size. Any green indicates an increase in position size. So as you can see here, these green ones, it's basically wanting us to increase the shares. The red is what we're decreasing, okay? So these red figures, okay? This is what we're decreasing, and we'll get to that in a minute. I do want to let you know that if you reinvested your cash, obviously it's going to use that cash to reinvest more shares. If you happen to not reinvest your cash, it's not going to have you add more money to the portfolio to get to this share size. It's basically taking the positions that's telling you to sell and taking that money and basically setting it aside for you to use on the positions it's telling you to buy. So you never add more money to the portfolio unless you're reinvesting your cash. All right. And then the next box here is the shares box. The shares column is going to provide your current share size. So this is what you currently have in the portfolio before we rebalance. And then it's going to show you how many shares you should have after you rebalance, which is the adjusted, okay? All right. And this is what I wanted you guys to see. So this is what we say we advocate for equal risk position sizing. So the whole idea of this tool is to get your positions to be evenly weighted straight down the entire, capital per trade. So as you can see, if I adjusted and did all of this like the tool says, every single stock in this portfolio straight down the line will be 1.08%, okay? And this is what it currently is. So you can see that I'm a little more overweighted with AutoZone. See how these figures are all different? They really shouldn't be like that, especially, if you're heavily weighted in one position, like heavy, and say that position goes downhill, you can be in lots of trouble. And that happened with the COVID crisis. When the markets went down, we had, we saw customers that were heavily weighted in some positions versus others. So their portfolio was risky. And, those positions, unfortunately, went downhill, and, it can really destroy a portfolio if you're unevenly weighted. So what this is doing is taking it 1.8% straight down the line. And how it's doing that is, I'll show you in the third tab of basically adjusting your shares. All right, let me just check the chat really quick. I think we're good. We'll get to some of those questions after. I'm sorry that nobody's on chat, but yeah, those are some good questions. We'll get to those after. All right. So when I told you in the beginning that, we're not basically investing the same amount of money into each holding. So just because this is 1.08% does not mean we're putting the same amount of money into each holding. So as you can see under the adjusted position size column right here, you can see we're not adding the same amount of money to get to this. So that's all behind the scenes that we do our calculations to get to the 1.08%. All right, so let's look at two examples. So let's look at Tesla really quick. That's a good question, Sandra. She asked, do we round the shares to whole numbers up or down from adjusted share amounts? Yes. So it does, the tool does show fractional shares, unfortunately. You can either round up or round down. It's based on your preference. I would, if it was a fractional share, I would probably round down, just so I don't have to add more money, or if you round up, you might have to put some more money in, if that makes sense, when you go to buy them. But hopefully we change this, because in the new Pure Quant tool, we're getting rid of the fractional shares. Well, we still give you the option, but it's going to be displayed in a whole number. So you can either round up or down. All right. So where was I? Okay, let's look at some examples, and we'll get to the other questions in a minute. I do see them. All right, so the two examples that I picked when I was going through here, because I ran it again today, so the script may be a little different because I did that last week, but let's look at Tesla, for example. All right, so you can see Tesla here. It's in the red zone, but we don't even pay attention to the health, by the way. I was going to tell you that at the end, but this risk rebalancer tool is all about the VQ. It does not take the health into consideration at all. So there are going to be times that the tool does tell you to increase your positions that are in the red zone. And that's because it's not even looking at the health whatsoever. It's strictly based on volatility. And that's why in that first tab, you were able to, open that little settings box and put a check mark if you don't want if you don't want your red zone positions to be increased. You could have checked that box and your red positions basically would have been blank. There would have been nothing here at all. There is another way to do it that I'm going to show you, but yeah, it does not take the health into consideration whatsoever. So there are going to be positions in your portfolio that it's going to tell you to increase because it may have a lower VQ than maybe something in the green with a higher VQ, but the other position's in red. So what I do before I use the risk rebalancer, just before we move forward with our examples, I tend to rebalance my portfolio once a year. I tend to do it at the end of the year to start off the new year fresh. And in my real positions, I do follow the health indicator. So if I were to put my portfolio through the risk rebalancer tool, I wouldn't have to worry about the red positions because there is no red positions in my portfolio, if that makes sense. If there were, I would probably on that first tab, and I'll go back and show you, I would probably check that box or exclude it, which I'll show you in a minute on this page. But yeah, if you're wanting to get rid of your red zone positions and you haven't already, maybe you want to clean that up first and use the risk rebalancer, or you can just exclude them, which we'll get to in a minute. All right, so Tesla. Let's look at the VQ, because remember, we're not even paying attention to this. Even if it was in the green, I'm sure this tool would have asked you to decrease it because it's highly volatile. So Tesla has a VQ of approximately 51%. So remember, anything over 50%, we consider a sky high risk stock. Okay, so Tesla is sky high risk. So you can see that it's wanting me to decrease, because remember, decrease is red. And it wants me to decrease it to this. So currently I own 20 shares of Tesla. It wants me to take it down to approximately 17. So in this case, of course, I would round down on this fractional shares. So it basically wants me to sell 3 shares. But again, Tesla will show you here. So if I sell those positions, it's going to be adjusted from this amount. So that's what I currently hold in Tesla. It's approximately 180 per share. If I sold 3 of those shares, this is the new calculation. So this is what I would be invested in if I made that change, not the 3,600. I'd be investing about 3,000 into them, but it's going to adjust it by approximately 2%. It's going to take this to make it 1.08%. Okay. Now let's look at Coca-Cola. Where's Coca-Cola? So Coca-Cola is here. So this is another example I wanted to show you. So Coca-Cola is approximately 14% VQ. Again, remember, anything under 15%, we're considering low risk. So Coca-Cola is considered a low risk stock. And you're going to see that this tool most likely is going to have you invest more money into Coca-Cola. So as you can see here, it's wanting to adjust the share size, position size to $11,426. So right now, my current portfolio, I only had about 3,100 invested in Coca-Cola. If I were to buy the shares, it's telling me the total I'd be invested with Coca-Cola is approximately 11,400. So by doing this and getting this number, I would have to come over here and increase my share. So currently my 50 shares equals this, what I currently have in the portfolio. Okay. So 50 shares of Coca-Cola equals this amount. If I were to increase Coca-Cola to approximately, I would round up in this one, approximately 182 shares, then that's where I would get this. So 182 shares of Coca-Cola, this is the amount I'd be invested in Coca-Cola. All right. And then you can see it's 1.08%. So I do want to throw it out there. Although we are basically, investing more money or less money in these stocks, again, it's going to be equal weighted straight down the line. Okay. So remember, current is what's in your current portfolio. Adjusted is what the tool wants you to adjust it to if you were to make these changes. All right. And this is very important because I have some stocks in here I can just see now where it's wanting me to invest, and it's kind of not a high VQ, but a little higher than one that isn't. So the tool will typically reduce the share size of your more speculative positions. However, this may not always be the case. So perhaps you can be too conservative in your initial position sizing. So what that means is your original portfolio, you are a little too conservative, and it's basically gonna, not do this, not basically reduce the share size of your more speculative positions. So if you're too conservative, you probably, it'll probably look different from here. Another point I want to bring up is that the latest close prices are also considered. So if you are invested in penny stocks, for example, your share sizes may also be increased, sometimes a lot, because of their low share prices. Okay. So if you have those penny stocks, that's what it's doing. I have one in here, as you can see, CYDX. It's only about 62 cents per share. And you can see the VQ is approximately 95%. And that's the highest one on here. And it's making me increase it. And that is because it's a penny stock, or the latest close is basically like under $1, and it's going to be increased. So you can see a lot. Look at this. It wants me to go to 2,660 shares. I actually meant to take that out. I did that as an example to show the yellow uptrend, how it works. So I totally meant to take that out. But if you guys have stocks like that, I would exclude those if I were you, because again, it's gonna change it drastically. All right, so now let's get into what if you don't want to adjust the share size of one or more of your positions. So say you're in here and you got your results and you don't want to adjust the share size. You want to leave it as is. You can do that right from this page. You don't have to go to your portfolio and put it like in a watch list or hide it or whatever. You can lock it here. So if you go over to this actions menu, there is a definition here, which it tells you that this will allow you to exclude positions or remove positions based on the stop signal, which is the red zone. So instead of you doing in that first page where you can check that box, to remove all red zones, you don't really have to do that. You can do it individually here. All right, so if you click on, let's find one. So say I didn't want to increase my shares on, let's see. Say I didn't want to increase my shares on Amazon. What I can do is I can click on this lock button, and it does tell you definition there. So if I click on this lock button, what this does is it locks the position, and it's going to include the position's VQ and the current number of shares in the rebalancing calculation, but it's not going to adjust your shares. So you might notice once I do this adjusted might change a little bit because it basically has to take those shares and try to apply them elsewhere to adjust them to be all the same down the line. And it's doing all of that behind the scenes. So as you can see, I locked the position. It locked. It's navy blue on my side. It might be black on yours, but I locked that. So what you can do if you lock that, you want to be sure to come down and hit update results here. All right. And you can see that Amazon is completely grayed out now. It's not green. And it's not wanting me to increase shares, but you'll notice my adjusted went from 1.08, I think it was, to 1.12, which is still good because remember, any percentage between 1% and 2% is considered, low risk and conservative. So I would be happy with that. All right, so that is a lock icon. If you want to make adjustments, the position size, the risk percentage per position, and the share will be updated automatically, which I just showed you actually. So this, and you can tell it's locked because it's grayed out. All right, so what if you were planning on closing one of your positions? That's where the X comes into, the X icon. So what I'm going to do is I'm going to unlock this and put it back in my results. So I'm going to click the lock button to take it back to what it was. Be sure to come down here and update results, just so I can go back to how it was. All right, it's 1.8%. Amazon's still in there in the green, not grayed out. All right, so what if you were planning on closing one of your positions? So this is where the red zone stocks come in. So you can do it right from here. So say that, there's a stock in here that you're planning to sell, you do not want to adjust it because it's in the red and you do follow the health indicator. And again, this tool is not taking the health into consideration at all. So say I was planning to sell Apple, you can do it right from here. You can do one or multiple if you wanted. So the X icon is going to completely exclude this position from the rebalancing calculation. So if I hit this X button, it's going to be marked with a check. Be sure to go down and hit update results. Okay, there we go. So Apple was excluded from the calculations altogether. And you can see it did adjust this a little bit from 1.08 to 1.13 straight down the line. And it basically took that those shares that it wanted me to add and put it elsewhere. I wish it would show me where it put it. I mean, you probably could print it or take a screenshot and compare like the shares here to see really where those shares went to. All right, so the cash value of the excluded position will not be redistributed to the remaining holdings. Your cash balance will also not be updated based on the value of this position. So that's only if you exclude it, okay? So there's a difference between the X icon and excluding. So please be sure to check out your script for those instructions and the definitions and all of that. So I'm going to put it back to where it was. So I'm just going to hit the check button. It's back to the X. Be sure to update results. So again, if you were planning to sell multiple red, you can literally click all of the red ones if you wanted to exclude them all. So if I did this, this, and let's do these. Let's just see what it does. So say I'm new to TradeSmith and my portfolio has some red and I'm cleaning it up, trying to get out of those red zone stocks because I want to follow the health. I'm going to exclude all the red ones. So as you can see, I excluded all the red. We'll leave the yellow in because, you know, it's not in the red yet. Yellow means cautionary in the middle. So it's halfway to red, but it has not stopped out yet. So we'll leave the yellow. Let's hit update results and see what it does really quick. And we're almost done. Okay. So what that's going to do is take the 1.08% and adjust it to approximately 1.62%, which is not bad. Remember, 1 to 2% is considered ideal. So you can see it excluded all of the red positions. All right, so I'm going to take that out and go back to the original by just checking the X's. And again, if you didn't want to do it from this page, you can do it from that very first tab where you choose your portfolio and you show more, I think more actions, and you can just put the check in that little box. And I can show you at the end too. All right. And then make sure you hit update results if you want to go back to what it was. All right, so I'm back to square one. All right, so last but not least, say you were thinking about buying a new stock that is currently not listed in this portfolio. You can go ahead and put it into this portfolio by clicking add another ticker. And you can search for the ticker. So say I wanted to get into Home Depot. I have no clue what that's at even. So I just came up with that in my head. I can type in the ticker symbol, or you can type in the name. If you don't know the ticker symbol, that's totally fine. And then make sure you find it. I want the one on the New York Stock Exchange. And then you can close this, hopefully. Okay. And then it's going to ask you if you want to add cash to your holdings to facilitate the new buy. So if you don't have additional funds, the calculation is going to reallocate using existing holdings and funds. So if you're not reinvesting your cash, you definitely want to put a dollar amount here of how, basically calculate how many shares you're buying and what the price is and put that dollar amount there. All right. And then you can hit save changes. So I'm not going to do that, but I just want to show you, you are able to add a new stock if you're, you know, you say you researched it and you're definitely planning to buy it, definitely add that in, or you can buy it first and come back and use the risk rebalancer tool. It's all up to you. We give you many options. All right. So at the bottom, if you're not wanting to do all of this yet, you are able to save it to a watch list portfolio. Just make sure you name it. And you can save your results to a watch list portfolio at the bottom if you'd like. All right, and then at the top right here, you have the option to print this if you want, or you can download it to a file on your computer. All right, we have one more tab, which is really simple, and then we're done. So last but not least, let's check out the change in holdings tab. I tend to look at this tab because I think there's so much information on here. When I come here, literally, to be honest, I just direct my eyes to here to make sure it's the same straight down and to the adjusted shares. So the next box is change in holdings. All right, so this is a little easier on my eyes, I feel. So this is where you can print this or download it. And this is basically like your results. You can take this, go to your broker site and do all these changes. So it tells you what to change here. So you can see. Really, I think this is a little simpler to use. So you can just take this. You can also save that to a portfolio if you want it as well. And again, green is to buy more shares. Red is the ones you're going to reduce. And again, it's fractional shares, so it's up to you if you want to round up or down. All right. And I like this too because it's a little easier on the eyes, like I said, but the change in holdings tab is also useful if you just want to see which positions are most out of balance. And, you know, you can decide not to adjust the position that is based maybe only buy a few shares and you don't really want to do that because it's telling you to sell like one share, you might want to look here and say, no, I'm not going to do that. All right, so we are done. You do have the script there, so please refer back to your script for any information. And really, that's all there is to it. So let's go ahead and recap today's lesson. Let's go back up here. I'll take it to here. All right. So along with the volatility quotient and the health indicator, equal risk position sizing is key to TradeSmith fundamentals. Again, when we talk about risk, we look at the amount of normal risk we take in each of our positions. Today, I showed you how we can just simply adjust the share sizes of your positions, that you can reduce your overall portfolio volatility. So here, the risk rebalancer tool is a guide that's going to help you avoid putting too much money into your exciting but volatile stocks and more money into your stable, low-risk stocks that may provide more consistent returns. If you have not rebalanced your portfolio in a while, you may want to use this tool to see if you can reduce your overall portfolio volatility. As a general guide, you may want to rebalance your portfolios once a year, which I do once a year. Most of us here in TradeSmith do once a year. Some of you may do twice a year or quarterly. If you're maybe a more active investor, you would probably do quarterly. All right, let me go ahead and pull up our contact us. All right, thank you so much for joining us today. If you have any questions, please contact our dedicated customer success team. This Thursday, May 25th, please join Marina Stroud, your product education lead, and Michael Bernick, which is our senior analyst here at TradeSmith, for a live discussion on the quantitative investing research with our business quality scoring system. So a lot of you, especially our platinum members, have questions on this. So that's exciting. We will review the metrics behind each stock's business quality score and how, the research can help you avoid emotional mishaps that can lead to big losses. Michael will also show you, I call him Michael, sometimes I do that. Mike will also show you how to scan for small and large cap opportunities using that business quality score filter that we have and other TradeSmith indicators. And then we'll end our lesson with a live Q&A with Mike, and you can pick his brain. He loves doing the Q&A. So please feel free to attend. Again, it is a platinum webinar. If you're not a platinum webinar, you are more than welcome to contact customer success for a guest pass if you want to sit in on it as well. So again, thank you for joining me today. Until next time, bye for now.